I promised you I would talk to you about taxes and bankruptcy, and I will. We're coming down to the wire here. Are taxes dischargeable in bankruptcy? I remember when I was in school many moons ago, they told us that taxes weren't dischargeable debt. And nothing can be further from the truth. Income taxes may be discharged in bankruptcy. Payroll taxes may not be discharged in bankruptcy. And under certain conditions, sales taxes can be discharged in certain states. We're not going to talk about that today. Let's talk income taxes. Here are the rules. Very simple. 3 years from the due date of the return, including extensions, income taxes are dischargeable in bankruptcy. The 2-year rule. Let's say you have delinquent returns. 2 years from the date the tax return was filed, they're dischargeable in bankruptcy. So you have a delinquent return, 2015, it's filed in 2017, on July 1st. On July 2nd, 2019, it's dischargeable. You don't have to adhere to the 3-year rule because the 2-year rule is enough. And we have my favorite rule, the 240-day rule. This applies to audits or amended returns, things like that. So you get audited. The assessment is $100,000. When the assessment becomes final, what happens? The clock starts ticking. Make sure it's final, though, not an NPA 60 days later, things like that. 240 days later, 8 months later, count the days, 240 days, do a tax dischargeability analysis. We show you how to do that in our 8-hour seminar coming up later this year. We do a once-a-year 8-hour. If you want to attend online or attend in person, call the office now. Space is limited. Well, not online. Watch for tolling events when you talk about bankruptcy. What's a tolling event? Well, there's lots of tolling events. If you do an offer in compromise, it's the period the offer was outstanding until it was rejected in writing, plus another 30 days. That's a tolling event. We like to watch out with our offers and have our bankruptcy option open before we submit the offer so we don't have that tolling event issue. If you do an installment agreement, the time it takes you to negotiate the installment agreement, sometimes it's a week, sometimes it's a month, but that's a tolling event. If the taxpayer lives outside the country for 6 months or more, that's a tolling event. So lots of things toll that statute of limitations for bankruptcy. Be careful. I've seen too many bankruptcy attorneys commit malpractice. You make money doing the TDA, the tax dischargeability analysis. Here's one of the ones we just did fairly recently, $612,000 paid zero, discharged in bankruptcy. Here are some ways to resolve tax issues. Prepare delinquent returns. Sometimes that does it. Do that bulk sale, a little bit fancy, but gets rid of it all. Turns a $500 liability into $250,000, and then the $250,000 into maybe $10,000. Innocent spouse relief. We didn't have time to talk about that today, but we do it all the time. Watch out for a notice that says CI. That's criminal investigation. And then choice of entity, of course, is something you need to talk about. Remember our preparation to birth to death cycle, the audit resolution cycle, collection and audit resolution cycle. We covered a lot of ground today. Audits, appeals, tax court, penalty abatement, collections, installment agreements, CNC status, offers in compromise. We've covered solving payroll tax collection problems, the trust fund recovery penalty, responsible persons, and so on. Talked a little about lien removal and bank levy releases and wage garnishment. We talked about the 3 rules, the 3-year rule, the 2-year rule, and the 240-day rule for dischargeability of taxes in bankruptcy. Some other methodologies, some other alternatives for getting rid of taxes. We covered a lot of ground today. What is our mission? To help you make more money, to teach you how to become a tax resolution specialist. 15 million people in collection at the IRS. My name's Peter Steffen. I hope you enjoyed today, learned something, and this is TRI. Thank you so much, everybody. Thank you.